Good morning, everyone. It's Pablo Zuanic at Zuanic & Associates, cannabis analyst here. I have the pleasure of introducing the CEO of MariMed, a leading MSO in the US cannabis market, Jon Levine. Jon, welcome.
Thank you, Pablo. It's great to be here. Nice to see you again.
Thank you. Look, we are, to the audience listening in, we take questions via the chat room, right? So, we don't use a raise your hand model. So if you have questions, please put them through a chat room. We have a list of questions we'll go through with Jon. But first, let's start, Jon, just an overview for those that are not so familiar with the company. Tell us about MariMed. And also, if you can pitch the stock, right? There are a number of MSO stocks out there, why people should be buying MariMed. Thank you again.
Absolutely, Pablo. It's great to be here, like I said. And, MariMed's been around for quite a long time. We're one of the older cannabis MSOs. We started off as a consulting company, writing winning applications, building out facilities and opening them with our partners. And then we started rolling them into MariMed in 2018. We merged in Massachusetts and Illinois into MariMed, the parent company, and have been able to report the real dollars that we were doing. So we've been seeing a lot of revenue increases year over year as we continue the growth of our merging of our entities and also the expansion of our businesses. We are presently in the states of Massachusetts, Maryland, Illinois, Ohio. We also manage a facility in the state of Delaware. We are fully vertical in the state of Massachusetts, now in Illinois, and also in Maryland. So we're very excited to be able to continue the year-over-year growth pattern that we've seen. As the markets all get tighter, we're still increasing our revenues through the growth of our business. And our balance sheet is probably one of the strongest, if not the strongest balance sheet in the industry. We have controlled long-term debt with mortgages and had some temporary borrowings in the cannabis finance world, which is very expensive money. And I'm so happy that we were able to get out of that in late December or early December of last year. That will help our cash flow continue to grow, which will help our stock price continue to rise as we not only show the increased revenue year over year, quarter over quarter in a down market for cannabis, but we're also very happy that the cash flow will give us the ability to add future growth without having to borrow much more money, even though our financial partner of Needham Bank has agreed to help us finance whenever they can with real estate. So if we have real estate that we want to expand into, that they'll be happy to give us additional funds to help build out additional locations. Our goal is to expand into states that we're already in up to the maximum number of licenses, get fully vertical in as many states as we can, including the ones that we're in, which would leave the state of Ohio and Missouri, which are two states that we're in or entering and will be working on expanding into. Our stock has really been off its price. We're one of the most undervalued MSOs in the industry based upon our balance sheet and income and cash flow. So the fact is that I just think that people still don't understand who MariMed is, why we're growing at a rate that we are compared to the industry. But our stock is going to go back up. It's just getting people to understand that this is a strong cannabis company with a very strong balance sheet. We have long-term mortgages that will give us the ability not to have to do any type of renegotiation of our debt for the next 10 plus years. So it's a very exciting opportunity for us as banking becomes more real. As we've shown, we'll be able to borrow money in the future at lower rates and be able to help our cash flow even more.
That's great. So let's delve into that. I mean, we actually wrote a report recently where we highlighted MariMed as being one of two MSOs in a group of almost 25 to have had the most capex relative to sales, right? So it was one of the companies that was investing in expansion And we made the argument, and I'm saying this to the audience here, that even without any regulatory changes at the federal level or even at the state level of new states opening up in terms of going from medical to recreational, that MariMed was very well positioned to grow because of those expansion plans. So let's go into those in more detail. Talk about how you're expanding in Illinois, in Maryland, and then Massachusetts. Jon.
Sure. I mean, Illinois, as I just said, we became fully vertical in that state. We just opened up our processing and cultivation center. We got the processing open first, and we've brought back our branded products. We have Betty's Eddies, we have the Vibations, we have Bubby's Baked, and Calm in the state there, that we're able to bring back Betty's Eddies to a state that we were licensing it many years ago with GTI. People are very excited that we've brought back Betty's, but the fact that everybody's seeing our new brands, they're really enjoying our Bubbies and Vibations just as much, and we've seen great revenue increases from that. We're also looking forward, as we are just finishing up the final construction on the grow rooms and just waiting for some equipment to come in, that we'll have our flower and our Nature's Heritage brand in that state this year, and it will be another increase of revenue in that state, and be able to introduce people to who MariMed is through our brands. So being fully vertical in that state is a great opportunity and very exciting. In addition, we are just putting the final sign off on the newest dispensary in Casey, Illinois, which is our 5th dispensary in the state. It is a recreational in Casey, and that facility is already open in a temporary location, and we're looking forward to the new location happening and getting the final authorization of transfer of the license from the company that we have an agreement and a management agreement with, to roll that in to the MariMed brand and be able to report that revenue in full. Then in the state of Maryland, when we did this newest loan with Needham Bank, we borrowed some additional money to finish a build out of additional grow capacity, which will basically more than double our capacity today and get us into additional flower. We have a state-of-the-art CGMP kitchen that we finished last year that is up and running, giving us the ability to produce high dose and low dose edibles, and help a market that is growing rapidly with their adult use program that started in July of last year. In addition, we're looking for additional dispensaries to purchase with the licenses that just went blank, that people didn't transfer from the medical program to the new program. There are a few licenses out there that we're talking to people, and hopefully be able to get a few additional dispensaries within that state. That's a great state as we bring on this flower during 2024, is additional flower trim, and give us more ability to make more products within that state. We've already got our full line of branded products in the state, from the Nature's Heritage in-house flower to our in-house and Betty's Eddies, Bubby's, Vibations are all already in that state doing very good. And the market is really liking the fact that we have ability now to produce high dose as well as regular dose edibles within that state. In the state of Massachusetts, we have successfully opened 3 now dispensaries, getting to almost the full amount of dispensaries. We have the right to 6 dispensaries, both 3 in medical, 3 in rec. We have applied to the state for a adult use in the city of Quincy. The state has authorized us to start the next process of moving to a full permit for the adult use, and we hope to have that sometime in short order in 2024, and be able to start selling adult use out of our Quincy market, which, if people from the New England area know, there's very big area of no real adult use concentration in that area. So I think that will be an exciting market to be in. Really looking for some great growth in there. We've got a building in New Bedford where we produce our flower in our kitchen, and we also bought our Quincy location with a license for grow there also, and we're opening that up to get some additional flower. And we still have expansion space left in Massachusetts to meet the demand as it becomes necessary for the additional flower. Our in-house in Massachusetts has really ramped up. People are really liking the that flower that we're putting into that name. It's very competitive with our top shelf flower of Nature's Heritage. Nature's is still one of the top flowers in the state, but it's a top shelf, a little bit more expensive. A lot of hand loving goes into that flower, and we're very proud of it. So as Massachusetts goes, we have ability to continue expansion through our grow and processing, building out a new kitchen sometime in 24, 25, and giving us more room to do additional processing there.
Right. So just on that point, in the case of, I know we'll delve into states in more detail later, but I think obviously in the case of Massachusetts, it's a bit of a contrarian strategy, right? Other people are not expanding. It's a market that's supposedly tight in terms of pricing, but the data shows that you're performing quite well there and actually gaining share on the wholesale front, right? So obviously it makes sense to be expanding there.
Yeah, we've done very good in a market where you hear a lot of negative about people not being able to grow their business in Massachusetts. Our retail stores are still doing very well. Our wholesale business is continuing to grow. Our brands are becoming recognized as a top leader, but our flower, both the in-house and the Nature's Heritage, continue to grow in this market. So we have to be able to make sure that we have a supply that can handle that demand. So adding the flower rooms into Quincy and being able to expand more in the future in New Bedford are two great opportunities to meet that demand.
Right. So now, in terms of when we look at, do you feel the need to quickly scale? You talked about gaining depth in the existing states. How do you think about new states, other states that could go, recreational, like Pennsylvania or other states that you could enter? Or is the focus mainly on expanding on where you are right now?
Well, we want to try to continue to expand in Ohio. Ohio is going to be changing over to adult use, so that will be adding additional market there. So we're looking at the possibility of become vertical in Ohio. We have a license in Missouri that we hope to get open in 2024 sooner than later and be able to move into that market. And then we will look at trying to expand to a fully vertical market in the future. But right now we're looking to expand because Missouri is going to be a branded market only, where we're producing our edibles and our vapes into a market that really has great competition. And I think that Betty's Eddies and Bubbies and Vibations are going to be well received there, as they have done in Illinois and every other state that we go to. And then we're looking at additional states. We've applied in the state of Texas, we've applied in the state of New York, and we're looking to go into additional states with limited licenses to give us the ability to bring our brands and our name into those markets and show those markets why we've been successful in every other state that we've gone to.
Right. Look, and one of the questions I normally get is whether MariMed, do you feel a need to quickly scale up to narrow the gap with other MSOs in terms of sales? But the truth is that if you look at your growth plans, right, based on that momentum, assuming no changes on new states going rec, you would be among the top operators based on our projections within a couple of years, just based on the current expansion plans, right? So I guess the question is more strategically the need to enter states that could go rec, maybe less so given your expansion plans in your core states. Do you agree with that assessment?
Absolutely. We've taken everything at a pace that we find to be the right pace. We don't want to go over leverage the company with debt and put ourselves into a tough cash flow situation. We have grown this at a slower rate than most, but as you just said, we're going to continue our growth year over year through the expansion, states coming online to full expectation and getting them to the limits that we need them to get to. We've just started our operation in Illinois, and I still see a lot of growth potential over the next 2 to 3 years before we're even at anywhere near the peak. And that's just because we've taken our time and done this right and entered these states at a pace where it makes sense for us and our shareholders not to add more debt to our balance sheet.
Right. And just staying on that point, in terms of funding, right, we get a lot of questions on safer banking, on whether, local regional banks can actually participate in the industry or not. You gave the example of Bank Needham, where you were able to refinance debt at a much lower cost compared to what you had before. I mean, for people looking at the need for more banking in the space, which we all agree is a need, of course, would you think of Bank Needham as a unicorn more in the space or more of a trend? I mean, is it more a one-off, or are there more local, regional community banks out there that could be lending to the industry and helping the industry refinance? How do you think about that?
I think Needham is the unicorn. They have been into not just the local peoples like ourselves, even though I grew up in Needham and it was a local bank to me when I grew up.
Yeah.
They've actually gone out and they've been lending to a lot of people within the cannabis business already. They just did a very large deal with us, but it's the first bank that looks at this as a regular business. And I think more banks are going to head that way. But the one thing I can definitely say is, MariMed, from the very beginning, we've been getting real mortgages since 2013. So for quite a while, we've been doing what a lot of other people have not. We found banks that would lend us with the appropriate loans that were just regular mortgages. And that's why we've been successful, not going out trying to grow at a rapid pace like a lot of our MSO competitors and borrowing money at high interest rates and having to give up a lot of equity when it comes up for renewal. So we've been doing it at a slower pace, but we've been doing it at one that really works great for our shareholders.
Right. And just staying on that transaction, on the refinancing transaction, talk about how some assets became unencumbered. And I think in the case of the Bank Needham, it was mostly tied to a couple of states. But expand on that. Just explain how balance sheet flexibility is a key asset and strength for the company after that transaction.
Yeah, when we went out in March of, I think it was February or March of 23 and did the Chicago Atlantic loan, they had a blanket lien on everything. So we had given up all of our collateral and ability to grow by bringing in additional financing opportunities. With the new loan with Needham Bank and paying off Chicago, we've got back all of our assets. We've just put up the Maryland and Massachusetts assets, and they're actually working with us on lending us some additional money in Maryland for our expansion and growth there. So they're willing to give money to us to help us grow, but we still have assets in Illinois and other states that don't have mortgages where I can go borrow money and put more mortgages onto those assets to be able to continue our growth. Right now, I don't see the need for it, but that we're trying to continue the growth through the cash flow and the Needham debt savings that we got just from the interest rate alone. Having that cash flow savings is just going to help us over the next couple of years.
Got it. So look, I'm going to move on to the subject of 280E before we go back to the business. So maybe spell it out here for us. If 280E is lifted, what would that mean for your business and how will you invest the forward savings? But on the other hand, if there's no change in 280E, would you take a more aggressive, assertive stance in terms of 280E like we've seen with other companies, right? Either not paying the income tax liabilities or starting to provision just based on the 21% statutory rate on profit before tax. How would you think about that? So let's start with the first question. How would you, how do you think about that and how do you reinvest the proceeds?
Well, being in this industry as long as I have been, we have understood 280E while others have struggled with it. And we've been very fortunate that we understand how to take advantage of reporting 280E to our benefit so that our taxes, even though they're still higher, we've gotten through the startup points where 280E really hurts the startup companies because it takes a while before you're able to make money that's equal to the taxes that you're paying. 280E is a struggle for a lot of the cannabis industry. The ability to have 280E overturned would save us millions of dollars and put it into our cash flow every year, which will help us be able to expand our businesses, but also be able to do upgrades or employee benefits that would be even better. But the fact is 280 is here right this second, and we have learned how to operate around it. We're, as I said, already cash flow positive, and we're looking to continue that but I won't have to borrow as much money if we're able to get that cash flow back, especially on startups when you're not earning the dollars and you're having cash flow losses that you have to cover. So it will give us the ability to do those startups and build those out so that we can merge them together and basically reduce our taxes.
Right, but on the understood. But on the point, if we don't get any changes, right, we're seeing some companies taking more aggressive stance on how they manage to ADE. Are you looking at that?
We have looked at it. I've spoken to our tax advisors. And again, we have shareholder responsibility to adhere to. And I would not want to put our shareholders at risk that if we were to fight something that hasn't been proven and all the track records show that there's big questions on what people are trying to make for an argument, I wouldn't want the penalties and interest to come back and bite our shareholders or us. I would want to make sure that we're doing the proper reporting so that we're getting the best advantage without penalty. So I would not be heading down those roads unless I knew there was an absolute that we could win.
Got it. Understood. Look, let's talk about the stock before we go back to the operations. So I guess the first question, some MSOs are looking at listing in the TSX. Is that something that would make sense for you, or even the CBOE there? Right now, you're CSE listed, of course.
Yeah, we're CSE listed. The Canadian market, we haven't done any fundraising for equity right now, as the equity markets are pretty quiet. Not a good time to be raising money. Doing a change to the TSX or the CBOE, we've looked into them. They don't make sense for us at this time. Staying focused on the current reporting through the SEC, staying up to date on that, and working on a future uplisting to the big boards here in the US are really our focus at this time.
Got it. And if I can ask, one of the questions I get from investors, obviously the stock, well, I shouldn't say obviously, but the stock has unwarrantedly underperformed in the last few months, right? Since, let's say, the HHS news came out late August, if we compare to other stocks that have almost grown by 4 times, do you have any thoughts on that? And I know you addressed it at the beginning, but if you can expand a little bit on that.
Yeah, I mean, we wish that we could explain why people are selling off our stock. Our value is much higher than our stock is at right now. We have one of the strongest balance sheets again, and I don't understand, the day traders, and we appreciate them. And that is really the people that are in the market right now. There's not a lot of investment bankers. There's family offices that have taken a great interest in us and invested with us, and they understand the numbers. Our numbers, as you said, we're one of the few that are still growing, while markets that we're in are showing numbers going the other direction. Yeah, we've been growing and spending money on CapEx and expenses to carry to get open. And unfortunately, the economic times have caused delays in building materials, which have caused us to delay a lot of our openings, or then you run into state regulatory approvals, which they can even take a lot longer. So, running into those roadblocks, we were very aggressive with our forecasting in the previous year. And, we missed some dates because of the construction delays or the state pieces. And those have basically, have slowed us from growing as fast as we wanted. But that continued growth will flow into 2024 and 2025 and show everybody that we have done the right thing. We are spending the money, as you said, to build our business and continue to grow year over year, quarter over quarter. And we're very excited about everything that we've got going on. Our CapEx will be coming down and our revenues going up. So those are 2 good things.
All right, understood. And again, I'm gonna rephrase the question, and I know you answered it in part before, but it keeps coming up. I mean, given the stock, and I know you're managing the business for the long term and you're focused on the business, why focus on the short-term movements in the stock? Totally agree. But do you feel the need for, let's call them sexy deals entering, Florida or again, Pennsylvania, states that could flip rec, that, that maybe could improve the growth outlook of the company? Or do you find that would not, from a fiduciary duty point of view, that would not be necessarily responsible? How do you think about that? And I know you touched on it partly before.
Yeah, I mean, again, you're going back to the responsibility to the investors. we have to make decisions of, people question us about why we haven't done a lot of acquisitions or mergers, finding the right groups or finding the right deals that are not overpriced. That's part of the problem, as I said before. We went out and we borrowed smart money so that we're not overspending or having a lot of debt on our books and records. A lot of these MSOs went out, borrowed money, and gobbled up other entities, and didn't make a difference if they were profitable or not. We're buying licenses, building them up from the ground up, or we're buying operations that we see a lot of upside in. So finding those deals at the right prices still means patience. And that's what we're taking. We're taking our patience. It's not that we're not looking in Florida or PA. We are. We've had several discussions with those. But for us to go into Florida would be tens of millions of dollars to build from the ground up. And right now, prices to buy a operation that is up and running is very high, and there's very little equity or capital out there, ability to raise money without borrowing. And that would be more of a strain on our balance sheet, which for our investors wouldn't be the right move if we don't get instant satisfaction of increasing our revenues and EBITDA at the same time.
On that point, and again, not to push back, what about a merger of equals, right? Similar mid-size MSOs, two MSO and another MSO that maybe, don't overlap so much in terms of states, but gain in scale. How would you think about that?
We love that. And we talk to a lot of people pretty much weekly. We just have not found the right partner to do that with yet, but we're still very hopeful. We have a lot of groups that we're still in discussion with. And, one day we will find the right merger of equals or merger of people that fit within the thoughts and processes that we have, that will make us a larger company and a stronger company, but still have that really strong balance sheet. And people will be very impressed when they see that we were able to do one of those. But unfortunately, those take time and patience.
Right. Thank you. Look, and before we jump back into the States, I think you address a number of issues why people should invest in the stocks, and one of the key highlights of MariMed. And I know people like to talk about, their culture, their people, their assets, and they are all correct to say those things. But I think in your case specifically, besides the strong balance sheet and the other issues you've highlighted, your brand portfolio probably stands out compared to other companies in terms of your wholesale business, right? That you do quite well compared to peers, and not just in edibles, but also in flower. Maybe just expand a little bit, because from outside, people can say, look, there's no brand strength in cannabis. It's really just about what the retailers want to sell. That drives sales, not necessarily brand strength. But just your thoughts on your brand portfolio and the relevance of brands in the cannabis space or in specific categories.
Yeah, no, we're very proud of all of our brands. Our brands are one of the top in the market for a reason. We're very careful about what we bring to market and consistency. Something that this market doesn't understand a lot about is consistency. You want to go pick up a Coca-Cola at the store, you know that it's going to taste like Coca-Cola. So when you come in and you buy a Betty's Eddies or a Bubby's or a Nature's Heritage, you want to know that you're going to get that same flavor, taste, quality of product. That's the reason that we went away from licensing our products out to just anybody to manufacture them, because we want to make sure that the customer is going to get that same quality, high quality products every single time, that are going to have that same taste. A lot of people talk about Nature's Heritage and why it's so successful. Well, we grow our flower with a lot of love and care. That's right down to the way that we trim it and pack it, so that we're putting that high quality flower into a little bit more expensive jar, but it's for a reason. So that jar keeps the flower fresher, that you get that same high quality result every time that you open up that jar, that you get that puff of smell. People just light up when they smell some of our strains, just because they're consistent. Massachusetts, for the longest time, you were unable to know what you were buying because the jars are not see-through. There's no way to understand what you're getting. And people would just buy for the THC levels, but then they get home and they realize the flower is no good. But when they buy Nature's Heritage, they know what they're getting and they're always happy. It's all about consistency, high quality, and patience that we put into every single one of our products to make sure the consumer is going to be happy with what they get every single time, and consistency of flavor, taste, texture, so that our edibles are always going to be top of the chart and give you the results. We keep adding flavors and minors so that we can go after targeted areas such as our Betty's Nighttime. It's one of the largest products that we sell in every market it goes to. My own mother takes Betty's Nighttime every night and raves about how great it is. And if she misses a night, how horrible she sleeps. So it's great to hear.
And I have to say, and consistency probably doesn't get enough attention, but spot on, right? I mean, I personally, and I'm not an a specific brand, but it's a leading national brand in edibles. I bought it in California, where it's originally from, and I bought it in Illinois, in Massachusetts, and New Jersey. And I have to say, the experience has been different, right? And you're thinking that you're buying the same product, it should be the same experience. So consistency is very important. And when people are licensing their brands, sometimes it doesn't end up being consistent. So kudos to MariMed on that front. So look, let's just go back to Illinois in particular. How are you have a retail business and a wholesale business. Talk about social equity stores. Some people are saying they were supposed to be additive to the market, create more demand. Is that true for you from a wholesale point of view? But is there an issue that they are diluting revenue per store, that they are also a source of competition for stores? And maybe specifically your stores in terms of where they are located relative to the new social equity stores, are you finding increased competition from them?
Oh, the whole market is more competition. There's more competition coming in every day into each of the markets. And Illinois has been a very difficult one, not just with Illinois growing 2 additional stores, but the state of Missouri coming online in lower taxes and similar products, but people driving across the other way to get their products versus Illinois. It hurt a little bit, but we've done a great job of promoting our customer service, our retail brand, and giving people a big choice of what you can buy at every one of our stores, so people will travel a little extra time to them. But yes, we have competition. We appreciate competition. It does take away a little bit of our store revenues, but we've succeeded before, such as in Massachusetts, when we saw a lot more competition come into our retail areas. And it's retention of the customer. Being from the Northeast, that's always about what it is. Understanding your customers and retaining them now and in the future. So you got to give the customer a reason to want to come back. Customer service is number one, just like our brands. You want the consistency. You want that big smile. You want that hug when you come in the door. And that's what we're trying to give at every one of our facilities so that we can combat those additional stores. We're also adding additional stores in Illinois, and we still have 5 more licenses to grow into. So we hope to compete with others and add more competition in other areas and grab some revenue.
Yeah, let's stay there. And I know here we're into the weeds a bit, but so in terms of Illinois, you have 5 stores. 2 are near the border with Missouri, 2 in central Illinois, and the Casey store, of course, near Indiana, the border with Indiana. So first of all, maybe differentiate in terms of the performance of those 5 stores. And also, when you're looking at adding 5 more stores, would that be from the existing licensees or more partnering with the new licensees, even the social equity licensees?
Well, let's start with the expansion. We're still talking to people that have paper licenses, to people that have operations that are in other areas of the state that are more north. We're trying to go a little bit more north. We have the central and south pretty well covered, and we want to see a little bit more up in the north area. But our stores that are in the Missouri area did feel the biggest impact of reduction in revenue. But our other stores, the south and the middle, have maintained a good, strong level, though there has been economic factors where the people are not spending as much of their cash flow on cannabis as they might have in the past, price compression. So there is a lot of factors other than just competition that's coming in. It's the fact is that the pricing was one of the highest in the country. Those are coming back down to closer to where they probably should be, and we are prepared for it. So I think that the years ahead are going to be tight, but they're going to be much better run if you're prepared and you have customer service that will bring in the customers to maintain the level. The number of units that we're selling have basically maintained. It's just the amount of revenue that you drive from them is not the same high level that it was. That's more of an economic factor than the competition. So we're happy that we're paying attention and getting ahead of the retention program of getting customers to stay or to come to our retail locations.
Right.
But competition's not going to stop. You know, Illinois is still has more stores coming online pretty much daily, and we always welcome competition, and we're not scared of it. We're just going to be prepared for it. But
Right.
again, expanding to the north or more to the areas that are outside of where we are today will help us add additional revenue in the state of Illinois.
Right. Before I jump to the cultivation side in Illinois, in terms of the Casey store, I don't know if you can comment on this, but can you is it already getting to a level of your central Illinois stores, or it's still too new?
Because the store opened up in a temporary facility, it was more of a trailer. Our retail store will be opening in the next couple months, and that will help generate additional revenue. I just think we were limited on how many patients we could serve a day there until we get to our new store. And I think that will jump up to our other store levels pretty quickly.
Right. And just going back to the wholesale side, so in terms of what you can disclose, I'm not so sure if any of the wholesale business, the Betty's Eddies, the edibles that you launched from the new kitchen, whether it's going to hit the fourth quarter or is it more a first quarter thing, and we probably see a ramp the rest of the year, right? But a bit more nuance and color in terms of the processing side, in terms of generating revenue from that on the wholesale market in Illinois.
Well, the wholesale market, we'll talk more about 24 with our earnings. I really can't talk about that, but the growth of having that come online, it was supposed to come online in Q4. It really didn't come online until the end of December, where we were able to ship product to our own retail stores only, and maybe one or two others. But yeah, January was a ramp up, and it's just going to be a continued growth on that wholesale business every month as we go forward in the future.
Yeah, and that's on the processing side. And in terms of cultivation, you said you expect to be up and running by the third quarter, roughly. Just if you can rehash that again and remind us of the canopy size in Illinois for cultivation, what you're building there.
The cultivation, we're capped out, I believe it is at 6,000 square feet to start, but we can go up by 3,000, up I think to 13,000. And we're prepared to open that later this year. I can't give an estimate of when because you never know with the constraints of delivery of materials or final sign off by the state. But yes, we expect that to be selling in 2024.
Right. And look, I mean, I'll make a comment here and you can comment on my comment, but I think something that people miss on Illinois is that they can say, well, it's already a rec market. What's the upside here? Well, in terms of per capita consumption, Illinois is still half of Michigan, right? So it still has a lot of room for growth, and that should benefit the retail business as well as the wholesale business. And like you said, prices have come down, but they're still well above the US average. So it's still a very attractive market, of course.
It's a wonderful market. We're still very excited, but I think the wholesale business is going to be a big piece of our growth in Illinois. Bringing the high quality flower into that market. People haven't seen a Nature's Heritage type quality flower. May not be producing a lot of flower, but we will be able to get top dollar for it. As I said before, it's consistency, the love that we put into the plants and the way that the flavor is always there, or the level of the THC effects that people are looking for will be more consistent than most of the flowers that are out there. But bringing our brands into that market, like I said, Betty's Eddy had been in that market 3 years ago, and was the top selling edible at the time. But we're going to be back up there. I just think that Betty's and Bubby's and Vibations are really wowing the market. It's something new, but it's fresh. And it's really exciting to everybody to get a high quality product out on a daily basis, and the people are enjoying it. It's only going to continue to grow. Okay,
thank you. Let's move on to Massachusetts in more detail here, if I can. So again, I'm going to make a comment. People think of Massachusetts as a market that's becoming overcrowded, too many stores, price compression. But the way I see it in your case, you have 3 stores. One is still med, so you could go rec. You have growth potential there. The Beverly store just opened rec in early 2023, so you have a ramp up there. And it's only the Middleborough store that was more established, right? So the retail side, even with your 3 stores, you have a lot of room, you have room for growth. And the wholesale business, what we're seeing is consolidation, right? Some peers may be coming out, and the stronger brands gaining share. So just your macro view of the market, is it bad, is it good? Simplistic question. And then, in terms of how you're faring there and your outlook for Massachusetts for MariMed.
Our outlook for Massachusetts is still very positive. We're still seeing growth in our wholesale business. Again, we'll talk about 2024 when we do our earnings call, but 2023 was another great year for our brands in the wholesale business. There was a big push for our brands at the end of the year, which were all exciting. And the branded products are just one of the top sellers at every month in our state. So we're looking forward to it. Our retail stores, our new stores still see increased revenue month over month. And we're seeing that Middleborough has leveled out, and we see ups and we see evens, and we're very happy with the retention program that we've put in. As I said, focusing on customer retention is a big piece of this. But the bigger piece is really the growth that we still have in retail in the markets that we're in. As you said, Quincy is going to go from just medical to adding recreational. And that's a market area which I think will do very, very well in, just because of the fact of the competition in the area and the lack of adult use availability in that area. So I think we'll have great success in Massachusetts in the near and future.
Thank you. Look, before we move to Maryland, I'm going to take some questions here from the chat room. So one person is asking, do you feel a need to launch new brands? You've talked about the new products that are coming through in Illinois, in Maryland, right? How your brands are performing in Massachusetts. But in terms of whether it's new formats or new brands, what's in the pipeline?
Our research and development department, we're actually putting more and more dollars into it. We're hopeful to get our newest test kitchen up and running in the next year. But we're focusing on expanding our branded product lines, whether it's new products or new brands, or expanding the lines that we're in. It's a very important piece of the business, I believe. I think brands are the future. People understanding who you are because of your brands, that consistency that we spoke about earlier. That's very important. If people know that we have a high quality brand that they like, bring in other products under that brand, will only want them to buy those products because they'll have confidence of knowing they're going to get a good quality product consistently, day in, day out.
Right. Look, another question from the chat room here. I'm going to paraphrase somewhat, but given on your footprint that most websites are already rec, and Ohio is the only one that can flip, that could flip this year, do you have a greater need than other MSOs to do a deal in Ohio? And what's the holdup? Why you haven't done a deal there? Vex did one recently. If you can comment on that. I mean, in terms of what you can answer, Jon.
Yeah, as I said before, finding the right deals that make sense for our investors and us is not just snapping your fingers and overpaying for something. We have been looking not just in Ohio, but in other states like Missouri and states that we're in, to find other deals to be able to expand in those states. Ohio is a very exciting state for us to be looking at. Yeah, but it's been very difficult to find a partner or somebody that's interested in selling the operation that would make sense for us. We did have one deal that did fall apart that I cannot discuss, but we were very excited about it. It would have put us into Ohio with a bigger footprint. But we're going to move on and find other deals. We are looking at them. We just haven't found anything yet. But people just have to be patient, because when we do it, we're going to do it right and for the right reasons.
Okay, but and not to put words in your mouth, but expanding in Ohio strategically would be a greater priority than entering a new state, or not necessarily comes down to the opportunity and the valuations?
Well, it depends on what state we're talking about.
Well,
I mean,
Pennsylvania, Florida.
if
I
I'm
mean,
able to enter New Jersey, that
right,
would be
no,
a
no,
great state to enter. That
right,
would be
yeah,
right up there with Ohio.
yeah,
But no, I mean, Ohio, yeah, we would be very fortunate if we could find a good deal in Ohio to move into quicker than any other state. But that's
right,
because that state is going to go adult use and it will be a great market.
yeah,
Again, people just have to be understanding that finding the right deal and not overpaying, having upside and getting your money back quickly is very important to the shareholders. It's not just about going into the state just to be in the state. We have to do it right.
right, yeah. Yeah, and I guess yeah, and the point is more, Ohio in terms of optionality of markets I can flip into rec, right? That's why people talk about Pennsylvania, Florida, Ohio. But understood, I get it. There's another question here, and again, paraphrasing and comment only if you can. In your opinion, how important is the stock performance being being included in the MSOS ETF? Not that you control the decisions of the MSOS ETF, but any thoughts on that? And don't answer if you don't want to, John. But
I mean, the stock performance, I mean, as I said before, we really can't control the day traders and what goes on. We have been doing what we need to do, which is put out good results, have the revenue increase, keep the strong balance sheet, make decisions that are right for the shareholders. I know that the market is way down and that our shares are way underperforming where they should be. I do personally get frustrated when I look at some of our competitors' stocks being higher than us when I know that our balance sheet and income statement are much stronger. But we can't control what happens with the public market. But we are working with people like you're speaking of on building their understanding of MariMed, and they are investing in us for the long term. They are buying our stock. Unfortunately, they're able to buy it from people at a very low rate. We'd love them to be able to buy it at a higher rate, but it is what it is today.
yeah.
And these people are in it for the long term.
Yeah. And two more questions in the chat room, and then we'll go back to no, before we run out of time. People agree that you have a strong balance sheet, but they're saying with only 13 million in cash now, how do you plan to finance more capex and M&A in the future? Will you have to rely on ATM and issuing stock? I know you touched on it, but if you can expand a bit on that question.
Our present capex is all funded through the new debt service that we got. We don't have to use our cash. Our cash will grow and our cash flow is positive. So we're hopeful to turn this, that we can do all of our future capexes through our cash flow as necessary. We will not use it up and leave it so that we can continue our growth. If we need to borrow more money, I would borrow it from the same banks or other banks with mortgages that are real rates, not the cannabis rates, and grow the business in the proper sense. I'm not going to go out to the market, sell stock at a stupid low rate when our value is much higher, but I'm not going to risk our shareholder value to grow.
Right. And on that point, I mean, strategically, with all the uncertainty, whether we get rescheduling or not, and when we get it, how does that color your decision making? Like, do you hold some decisions, or until we have clarity on that, or do you just run the business as per normal? How does that affect you in any way in terms of your decision making day to day?
We run the business the way we run the business. It's not going to make a difference whether it's 280E or no 280E. No 280E may make it a little bit more value of what we're buying, but no, our decision is to run the business like a business and make sure we're making decisions that are best for the shareholder value.
Right. Thank you. Just going back to Maryland, quick question. Maybe explain to the audience those stores that could be available for sale, right? There are MSOs, a number of MSOs that are involved in the state already they are capped, but there are some stores that could be available for sale. But the way I understand it, not everyone can sell, right? Because of restrictions in terms of licensing and transfer of licenses. Just explain the supply and demand side of things there in terms of retail stores in Maryland, please.
Yeah, Maryland, when they went to adult use, if you had paid for the transfer from medical to adult, that put a cap of 5 years before you could transfer the license. So people are in there and they're locked in for 5 years before they can do any type of sale. But there are maybe a half dozen entities that chose not to convert and had to close their doors. And there's a few of them left that are still trying to move their licenses so that we can go in and try to buy those licenses and open immediately. And then there's also the newest application program that just went out for social equity, where we can join up and be a partner with a social equity applicant and convert it at a later date, but have a management contract and some minor ownership. But we're paying attention to trying to expand there. But again, not just buying a license just to buy a license. It has to make sense and be in a location where we can make revenue now or in the future.
Right. And then just on the wholesale side for the audience, remind them what you have at the moment in terms of kitchen processing and cultivation and what expansion plans are there, or maybe you already completed your expansion in Maryland in terms of where you can supply the market.
In 23, we finished our certified GMP kitchen, which gave us the ability to enter the high-dosed edible line again. And we're fully up and running in that part of the business. We are doubling our grow facility, maybe a little bit more, and that construction should be done in the next couple months, next few months. But it's a matter of getting the equipment in and the final pieces to get the CO and then get the state approval to open those rooms. But we will have expansion for flower growth this year, which will help us generate additional revenue as the demand for flower, especially our flower, has been very high. So being able to get our flower onto the market, our Nature's Heritage is still one of the top selling flowers in that state. There's a big demand for it. It's because of that consistency, the knowing that you're going to open up the flower and get that same quality every single time. And it's a great market. We're very excited to be there. It's just to be able to grow to the full license number is going to be a lot slower because of the restriction of the 5 years or the ability to get management or sign up with a social equity person. We are applying with some people and hopefully we will expand in that state sooner.
Right. Look, I mean, someone is asking on the consistency question, given that you brought it up. How do you measure quality and consistency of your products, particularly flower? What kind of control failure rates do you expect, and how does it vary by market? Just a short answer, John, if you can on that, because I think consistency is a big deal and maybe something that not everyone achieves on a consistent basis.
Yeah, and consistency, and I guess the question was on flower. I mean, we've had a very great success rate in all of our markets of not losing grow rooms to any type of spur or anything that would make the flower fail. Part of that is the way that we grew our facilities is we build everything with independent controls in each of the rooms. So no rooms are sharing any type of supply of air or anything else, so that the rooms, if one gets infected, it doesn't infect the whole plant. I have seen over my years that people have lost full crops throughout their whole building just because they have shared air handlers or watering systems. We have everything independent in each of the rooms, which is a big benefit for keeping that consistency. But it's the fact is the way that we maintain our mothers, the way that we grow our flower, the consistency in our the material that we put to feed the plants, the way we feed them, the way we trim the plant, the way we package and store the plant. That is what causes our flower to be consistent and have that high quality level every single time. There are some strains that from state to state, because of testing, you'll find that the testings areas are a big question mark, because from state to state, there's different testing labs and there's no consistency on what you get for test results. But we have been very fortunate that the groups that we've signed up with, we've gotten great results, and we continue to see that the tests are maintaining from state to state, and it means that we're giving our patients the highest quality flower.
Just one quick question on Missouri. What's the holdup there? You are in the process of buying or building a facility. Just quick comments on that.
We had been in the process of buying the license and building the building, and getting the state to approve a new location address took almost 11, 12 months to get the approval for the new address. We actually just got that, and we're hopeful to be able to start construction sooner and be able to get into that market as soon as possible.
So that would be more a 2025 story in terms of revenue generation, or not necessarily?
Absolutely. I mean, we're looking forward to that. But if it took 12 months to get a change of address, I just hope it doesn't take 15 months to get an approval for a license.
Okay. Thank you very much, Jon. We really appreciate your time here. We have a couple of minutes left, but closing remarks, again, why people should be looking at MariMed, and just closing comments. Thank you.
So Pablo, again, it's been great to be on with you, and I thank you for having me on to share all this information with the investor markets. And I think that the biggest piece of this whole thing is the unknown of who MariMed really is. MariMed is a big player in the market, but has been growing at a pace that's a lot slower than everybody else, which is due to the fact that we're trying to maintain our increase in revenue quarter over quarter, year over year, and be profitable and cash flow positive as quick as possible. That's why it's very important that people understand, just because we move a little bit slower doesn't mean we're not moving at a fast pace. We're moving at a pace that is right for the growth, so that we can give that high quality, consistent flower, the brands and everything else that the consumer and the customers are looking for on a day-to-day basis. It's about the patients, the customers, and the investors. We want to help all through our cannabis.
That's great. Thank you very much, Jon. Thanks, everyone, for joining. Have a good day, everyone. Thank you. Thanks, Jon.
Thank you.